We've got Sean Callow. He's currency strategist at Westpac. He joins us from Sydney. Sean, good to see you. So the carry trade has produced some impressive gains over the course of 2011, but May, well, it hasn't performed too hotly. What's going on?
Yes, it has been a lot more mixed. Risk aversion has certainly picked up, and there are definitely growing signs of jitters in the market, and essentially volatility is the enemy of the carry trade. So everyone can see a low-yielding interest rate, you can see a high-yielding one, and you can assume that particularly in the case of Japan, that you've got a lot of time to borrow that before rates rise. But as volatility picks up, equity markets become more scratchy. We've seen a lot of volatility in commodities as well. That very much hits carry trade returns.
Now, one of the reasons that these investors like PIMCO have been telling us that they are piling into Asian currencies is because that volatility can be lessened by intervention on the part of these central banks.
Yeah, it certainly can on the Asian currency side. I guess the volatility concern is on the funding side. If you borrow US dollars, which are obviously free floating, or borrow Japanese yen, then it can move very sharply. But certainly on as far as the Asian currencies themselves are concerned, they're by and large relatively low volatility currencies. They have different regimes. It does vary across the region, but for the most part, the central bank is never too far away in terms of clamping down on wild FX swings.
So, as we see this risk aversion come back into the market, is it a good buying opportunity when it comes to these Asian currencies? What do you buy right now?
Yes, well, certainly there are some much better levels. I think right today we've seen enough jitters in the Asian currencies that you'd be a little bit cautious about whether today is necessarily the right day. But we have been recommending long Indonesian Rupiah for quite some time. One big positive there is that the central bank explicitly uses it to keep a lid on inflation, whereas that's not the case across the region. The Singapore dollar is another one which has obviously an explicit appreciation bias, albeit modest and gradual, but we like that as a steady gainer. The Korean one has great upside potential, but there was a lot of disappointment over the absence of a rate hike in May from the Bank of Korea.
And what about these commodity currencies? Are they still overvalued?
They're getting to better levels, but clearly they've come down with commodity prices. So the Aussie dollar, for instance, has weakened in line with weaker copper and aluminium, etc. A lot of base metals prices have been sharply lower over the past few weeks. So it's weakened in line with those. I think the Aussie is not far from fair value at this point. The terms of trade overall is still extremely high, and of course we've got the Reserve Bank of Australia threatening to hike interest rates soon. So that's something that we're not seeing in much of the developed world.
Sean, very quickly, are you selling the euro at the moment, given the increasing debt crisis, the deepening debt crisis here?
We certainly have been for the past couple of weeks. It is starting to show a little sign of stability now, and a lot of the positioning, as we see from the IMM, has been wound back. I'd say there's probably a short term, at least a test of 140 up for the euro, but I think the selling pressure is starting to wane.
All right, Sean Callow, thanks very much.